What's up, everybody? Welcome to Toxic Hustle. Welcome to episode 3 of TnT Toxic News and Toxic Trading. My name is Jay Tragic Jeffrey, and today we're going to be talking about the November dip, whether or not if it's over or has it happened, which it hasn't. We still got some range. We're going to talk about that when we do trades, and also understanding that crypto winter is not over. We are still in the thick of it. So let's go ahead and get into it. First, this is brought to you by Toxic Hustle. What we're doing now, and what I just came back from vacation. Not really vacation. I went to a wedding. I just came back from my cousin's wedding, and we had a lot of talks with some of my other cousins that are prominent in what they do. And one of the things that especially in this time, what I remember, and it's always going back to your roots. There's a lot of people that I've talked to, like we talked to cab drivers and talked to people that I've worked with, and even people that during our wedding in September, myself and my wife, there's always been somebody talking about, hey, I'd like a website, or hey, I need a website, and how do we go about doing that? And what we decided is, hey, it's time for us to improve what we're doing and how we're able to get these sites done and how we help our clients. So one of the things we've done is we have we have packages now in which these are the starting prices. This is not the price you're going to get, but just to let you know, this is what the prices will go. But we'll help set up websites. We're setting up e-commerce shops because we do it for ourselves as well as we do it for our clients. And one of the things we want to do is be able to help people get their businesses rolling. Like if you do not have a website in this digital age, you're pretty much setting yourself up for failure, because you need to have a product, subscription, or service. And as we get into a more digital world, as we get outside this analog one, you're going to need it. So you need a digital presence. So we help shape that digital presence for you. Also, we have AI and automation services where we help automate ourselves, how we automate our stuff online for some of our other projects and some of our clients, especially like our design clients and stuff like that. So go check out Toxic Hustle if you're interested in some web design services. Also, if you go into our shop, MG the Future, we have he's been selling his packs. We're partnered with him for our Pirates of the Dark Age. We're also going to be working on more stuff coming up this week. We're going to be working on designs and things of that nature for clothes and gear. We're going to be setting up templates so that if you're working with our sponsor, which is Printify, you're able to get these templates and be able to design your own gear, right? Because as you see what's going on with manufacturing in China, and what we're seeing now is print on demand is beginning to take, especially as the costs are being lowered. You're able to now get these types of designs. As you see, we have our Sleepy Joe ugly sweater design. We're going to be selling the packs for this week. So what we're doing is, if you come to our Hustle Gear Printify.me, it's pretty much, if you go to this website, this will let you know what packs are getting ready to come out for products. So our Christmas product pack will be coming out this week, and you can be able to purchase that from ToxicHustle.com in our shop. So without further ado, let's get into the news. First things first, let's start at the bottom. The CBOE Digital to launch Bitcoin and Ether margin, which is basically debt, so loans, credit when you're trading, futures, so you're speculating on the future, in 2024, aims to bolster liquidity. Now, the thing is, the CBOE has announced its plans to offer margin futures trading for Bitcoin, BTC, and Ethereum starting January 11, 2024. They're saying they want to provide secure access to regulated futures markets is key to maturing this nascent asset class and enabling broader institutional participation. And they basically are saying that this is no different than any other spot. The futures ETFs is no different than anything else. They want to get a spot ETF, but this is letting you know what happens with this. When you trade futures, you're putting your money not in Bitcoin. They don't have to own the asset. This is the same way they manipulated the gold and silver and all the commodities markets, is that they can print paper and then push an asset down. Now, if we were to just print paper, create debt out of thin air, and they would call that counterfeiting. They would call that counterfeiting. But for them, oh, it's just margin trading. So you're taking out a loan to be able to trade. And if it goes reverse on you, not only do you lose your collateral that you put up for it, but now you owe because you lost the credit that they gave you. So this is a great way for you to lose a lot of money really, really, really fast. So they're getting ready. They understand that. Notice this in January. So they understand the cycle. They understand that after the January dip, which is right after the first week of January, is the perfect time to come in with this. And then we have the halving cycle getting ready to cycle back in come sometime in spring of next year. We'll begin to get a countdown clock on that as soon as we can see right around where it's going to be. And we'll get a countdown clock on that. But this is another way for them to manipulate the markets to the downside. All right, what's next? Homeowners won't see a profit for a decade. Get comfy, homeowners. It can take up to 13.5 years to break even on your purchase per Zillow data, exclusively shared by Axos. So everybody bought their real estate way too high. They need to cut it. And as the market begins to correct itself, because pockets are getting tighter, especially after the holidays, pockets will get tight. So it's going to be even worse come January, February, March. Why? That's tax season. So now people are going to be burdened with taxes. So now they're going to have to come out their money for that. So we're going to see what happens come spring, but they're already talking 2024 recession, even though we've been in a quote unquote silent recession. Just understand that as Airbnb bubble begins to pop, because nobody's taking all these trips and the people that own these properties are going to have to try to offload them, pushing prices even further down. So just expect that people are going to be sitting underwater in their homes, no different than in the 2007, 2008 situation. So they're just prepping us for the same. Bitcoin miners earned 44 million in a day to record annual all-time high. So yes, Bitcoin mining community recorded its annual all-time high on November 12th after raking in 44 million in block rewards and transaction fees. The revenue from Bitcoin mining primarily comes from rewards for confirming Bitcoin transactions and creating new blocks. So if you understand what Bitcoin is, it's just a series of transactions of being able to send money all over the place, because the code sits on a machine, and not only can the corporate entities mine Bitcoin, but anybody who has a computer can mine Bitcoin. Now, will you be able to get the Bitcoin being mined by yourself? It's like a lotto ticket. At the end of the day, that's what this is. So what we're looking at is they are already hitting record highs, but right around the corner from that, let me see, where is it? Here we go. Same time, right? Bitcoin showing bearish signal as miners unload. So remember, they just told you they just made all-time high profits. So what are they doing? Trading. They got rid of 175 million in BTC. Closely followed crypto analysts is issuing a warning saying BTC just flashed a signal suggesting that the sell-off may be imminent. So they sold off. They took their profits. And I keep saying that we could be in the midst of of a November dip. So looking at the activities of Bitcoin miners, Martinez says that the investor cohort has been using the recent rally to unload thousands of BTC. This is why we're going to be the course that I'm getting ready to roll out this week, and it's going to be free. Yes, not behind a paywall. We've got our Printify sponsor now. We're not going to put this behind a paywall. Our goal is to now get this out, especially as I begin trading, because like I said, I've been waiting for this dip. So this seems like it's beginning now, but we'll see in the next few weeks. I'll go to the charts and we'll talk about it once we hit the charts. But yes, they're going to offer, traders are going to trade. Miners need to earn something to be able to pay for the electricity. So this is actually a good sign for us. The fact that Bitcoin miners went ahead and made some guap right now, it means that they're cushioned out potentially for the rest of this winter. They can pay their bills, but if they did this right and they have a good business practice, they should be able to ride out the rest of the winter and get through spring till next year. And if that's the case, well, this is actually a good sign. Now, what does that mean for investors of Bitcoin? If you didn't take advantage of selling a bit and earning and getting some profits out, you can either hold, continue to hold, and continue to wait for the pump back up, or try to find better entry points, which we'll be talking about once we get into the trading side. But miners are going to sell. They have to pay their bills for the machines that they're running. And when the halving cycle comes in, please understand this is not the greatest thing for miners. Yes, it means that there's less Bitcoin being minted, but it also means they earn less. So it's going to be even harder for them to earn crypto after the halving. So we'll see how that shakes out. But every 4 years or so, the amount that you make in Bitcoin reduces. Let's see. Let's go back down here. Hold on. Let me hit refresh so I can clear this up. Next. Now, there's going to be some people that harp some crazy ass numbers. And this is not a crazy number, but I don't see that coming anytime soon, but I could be wrong. One of the reasons why the course that I'm doing, which is the Bitcoin crypto trade, Bitcoin trading and market making, the reason why we're not putting up behind a paywall is if I was on my Dean for how I trade and I know a dip, a major one like this was rolling down the pipe, I should have already bought to ride it up so that I could then trade through that ride up through October and then been able to sell before it crashed back down. But I didn't do none of that. So why am I going to sell you a course? And one of the things that stick in my head from one of my mentors was, if something is so good that you can earn money from it, why are you giving it away? Why do you have to charge for it? Excuse me. Why do you have to charge for it? Because you should be able to make money in whatever it is that you're doing. And I didn't make any courses for Bitcoin through the last cycle because I was already making money. So why would I do a course when I'm too busy trying to figure out how to keep making my money? My thing is now I'm going to teach y'all how to fish and do this yourself, right? And I'm not going to put it behind a paywall. So Bitcoin getting to 60,000, that's not a surprise, but I don't see it right now. Now, I could be wrong, but I don't see that right now. Not with where we are in the economy, not with all the layoffs that are happening, not when a teacher is sleeping in their car to try to survive, not as the cost of living has people making a decision of whether or not they're going to get medication or buy Bitcoin. Yeah, that sounds cute on paper until people get their face smashed in with the next drop down. Again, I see the cyclical timing of Bitcoin. I'll show you that when we get to the charts, but right now is not the time to go all in like this is it. This is not it, especially since we haven't even gotten to the halving cycle yet. So let's just give us some time, let it play out. But yes, 60,000 is not out of the realm of impossibility. It definitely can hit that. It's hit it already. It's just I don't see it happening quite yet. That's a whole lot of cash flow that's got to run back into the system with a whole lot of people still trying to figure out how to eat. So you'll see a bunch of news articles trying to get you to FOMO back in so you can carry somebody else's bags. This ain't the time for that. Next up, this is why I say crypto is going to be in a very interesting position come the next cycle. Because remember, we're not dealing with United States dollar. We're dealing with international commodity. Multiple countries have already said Bitcoin is commodity, including the United States. So with Bitcoin being a digital commodity and they are mining it, right? They have hardware to mine. And it's a limited access thing. There's a limited quantity. Only 21 million Bitcoin. And I think 18 or 19 of it's already been minted. 6 million is vamoose, have been locked behind people forgetting their keys to their wallets. And the last Bitcoin is going to be minted in 2140. That's over 100 years from now. So when you see that 9% of French adults are now invested in crypto assets, 9%. What happens when another 9% from every other country decides to get into crypto? We're not looking at whether or not America's okay. We're looking at whether or not people who have the liquidity to be able to put money into this, regardless of where they are in the world, decide to do so. So just be under the understanding that we're not the only ones trading this. We're not the only ones buying this. This is an international commodity. And as such, of course it'll go up. But we need fear out of all markets to kind of baluster itself out. Because with AI and everything else is going on, a lot of businesses are changing up what they do or shutting their doors because they don't need anybody. Or they don't have any clients because they're still based off of an analog world as we become digital. What sense does it make to commute to a computer when your computer at home probably has better broadband, if you have a high broadband provider, than what you get in your office, with all those people sharing the same broadband, getting a percentage of that, right? You have all your broadband at home to yourself, which is probably giving you better speed than what you're getting from what you get at work. So more, especially as banks and institutions get in here, there will be more capital coming into this. But of course, we're waiting until their ETFs get accepted by the SEC and those types of people, whatever in your country is the same. But some countries already have Bitcoin ETFs, spot ETFs. So as those become more relevant, you're going to see more and more people in here. So we will see a higher number, not just in France, but in multiple other countries begin to trade this next cycle. That's why I want to show y'all how to trade for yourselves and also how to become a market maker. These next. All right. I know I'm going to shake a lot of feathers with this. Ethereum transaction fees climb 219% in 3 weeks as on-chain crypto transfers become pricier. One of the reasons I have a problem with crypto, and I bought Ethereum at $5 and I had to sell it in the 2017, 2018 cycle, right? I had to sell all of it because bills. Part of my problem is, as a business owner, if I'm using a database like MySQL and I want to spin one up, I can spin one up for about $5 on Amazon. And I can use it however I want. Now, of course, one central database can get hacked. And with that being hacked, well, your data is corrupted. And the good thing about blockchain is being decentralized. If one computer over there gets hacked, that has nothing to do with the chain because the chain is validating itself. And that self-validation or error correcting code simulation is what's good about the blockchain. The problem I have is it's way too expensive. Over the last 3 weeks, the transaction costs for Bitcoin have climbed sharply, reaching a peak of $15 per transfer in just 3 days ago. $15 per transfer? Similarly, the cost to transfer Ethereum has jumped significantly. In the span from October 22nd to November 12th, 2023, the average fee for Ethereum transactions soared by 219%, increasing from $2.08 to $6.64 per transaction. Now imagine I have to buy a stick of gum for $1. So you're telling me, if this is why I say you can't, like, crypto is not feasible for anything quite yet. You're telling me I gotta go spend $6 to get something for $3. See how it doesn't work if you're going into gaming, lower fee. Like, everything is expensive now because of the fee. That's why there has to be something else, because that makes no damn sense. So we're gonna have to deal with that in due time. We're gonna have to deal with that, with sending money to somebody else not costing so much money. But because for now, Ethereum, Bitcoin, especially with them doing the ordinals, sending money back and forth for purchases that are lower in price point will not make sense. It's expensive database. That's what this is. I like crypto too, but understand it's nothing more than a database. And it's an expensive one. It's not a $5 per month and I can run unlimited damn near transactions on it. Hundreds of thousands of transactions that cost me the same $4 per month or $5 per month, right? It's not the same. So as a business, how can I run on top of that? I can't. So till they figure that out, which is their layer 2s and all that other stuff, till that gets figured out and hammered out, we're going to have some issues with that. Ethereum. The spike in Ethereum fees mirrors the uptrend seen in Bitcoin's transaction fees, as expense associated with the gas required for transferring the digital currency has escalated in this period. During the last cycle, transactions could get up to thousands of dollars. I've seen $100 transactions for something that was small, maybe $50, and they're paying another $100 on top of that. That won't make any sense. So don't get gassed. Things are going to level itself out. But right now, with the ordinals on Bitcoin, which is the NFTs on Bitcoin, and now everybody jumping back into NFTs and stuff like that on Ethereum, we're going to continue to have some growing pains. All right. So in watch your back, you know, they got you open beats. Binance CEO says executives from a client were lured into a massive $12.5 million crypto robbery setup. The CEO of the world's largest crypto exchange says that executives from one of its clients recently fell victim to a multi-million-dollar heist. In a post on social media platform Twitter/X, Binance CEO CZ says that the executives were lured into traveling to Montenegro for the purpose for a purported business trip, but were instead kidnapped and forced to empty their crypto wallets. This is a continuing series of robberies slash kidnappings that have been happening, and then the silent ones that we don't know about. The robbery setup led to a total loss of $12.5 million, but Zhao says the perpetrators can no longer access most of the stolen assets since Binance and its partners worked to freeze the wallet holding the ill-gotten funds. Centralization, anyone? See what I mean? So if this was an open thing, that wouldn't be able to happen. If it was a wallet, your keys, you give it to them, it's on the open range, open air, open market, you lose it, it's gone. Because it was still locked behind his walls, he can still control it. So don't think that these exchanges are safe, or they can't freeze your account and steal your crypto. Because if they can do this and freeze it because of this situation, this is a good warning sign that, hey, not your keys, not your wallet. And also, don't tell anybody you're in crypto. Me, I don't give, because I ain't got that much. I sold it already. So get ready, y'all. Just be careful. But this is consistently happening all over the world. Especially what I've been seeing, I think it's in Switzerland. That's been going on a lot. So please be cautious. Don't go bragging. Don't be out in the streets talking about you about to get a Lambo and crap. Please be on the humbles when it comes to this. And the last of our news, I know it's a lot of news, but I wanted to get caught up with a lot of things that are going down. And some of the news reflected some of the stuff I wanted to talk about, like last week and the week before last, before I was having microphone issues. Investment titan Blackrock questions the SEC, argues spot Bitcoin and Ethereum ETFs are not different from future ETFs. I'm calling BS right now. They are different. Why? When it's dealing with a futures, they don't have to buy Bitcoin because they're issuing you debt and you're trading paper. If they have to do a spot ETF, they have to buy the underlying asset. Means they have to come out their pocket now. So this is a great way for them to flip paper and get people buried, and they get their ass handed to them. And when they lose their money, they can now take their losses and go buy Bitcoin. And don't get it twisted. Every major bank come the next cycle, which will be after the halving, the next bull run is 2025. So after the next cycle, get ready. Because Fidelity, JP Morgan, all of them they have it all ready to go. BlackRock, Vanguard, they're all ready. So get prepared, because once they get their ways to flip paper to try to keep suppressing the Bitcoin price, that's why gold got suppressed, was because they've been able to get people to speculate, basically gamble crypto with not being an investor and holding the underlying asset. And why I'm showing you how to be a market maker is I'm showing you how to trade the liquidity of it, take your profits and put it to the side. Especially if I'm going to be doing it on Coinbase, which now leads us to the November dip. I've been saying that the November dip is coming. Now, if you go back in time, I went back into my old videos and you can see November 17, November 11th, I talk about a dip, and then I talk about it in January. These were the dips that I was already beginning to see. I'm beginning to see there was a cycle, a pattern beginning to happen. And then I told you in March, of 2018, that's when I was still doing this. And then I put one out for this a couple weeks ago. So the Bitcoin dip is a consistent thing. And if we go into our weekly on the Bitcoin chart, I have it flagged here, and you can see this big candle right here on the first week. But of course, that's after a major sell-off. So you had this sell-off over here, and then you have this Bitcoin dip right here. Let's try to stretch this out a little bit more. And let me go ahead and close the rest of this out so you can kind of see it better. See? We had that dip, and then it bounced back up right around January timeframe. And that's when it was really supposed to have a January dip, but it didn't happen. So sometimes dips come in and sometimes they don't. See? It didn't come in. But if we go back in time, this is 2021 when I told you, hey, watch out, there's a dip. And boom, here it is. And then boom, it keeps going down. Let's go back in time. And then we're going to have to scroll up. So right here on this line right there, right? And then drag down on this line. This is during the bull run of 20. This is the halving cycle, right? So next year. So no dip happened because you're in this halving cycle. So this is why I say, yeah, you could get a dip or maybe you don't. But let's go to a year before the halving cycle. So 2020 was the halving cycle year. 2019 would be the year prior to the halving cycle. This is the year prior to a halving cycle. Next year is the halving cycle. This is the year prior to it. So let's look how Bitcoin played. Let's look how Bitcoin played during this cycle. Let me find where that mark is right here. This is November. So that line right here. Let's scroll on down. So boom, here you are. That's the line. Now that was last week. It didn't happen. But you see what happened here? The next week, that's the week of the 19th. You see what happens the week of the 19th. And this is actually the week of the 11th, of 2019. So this is, and then the third week of 2019. You see that sell-off. So I'm under the impression, and you can see there's the arrow right there on this line right there. So I'm under the impression that if it decides to play out this way, because remember, it was above the 200. It's above the 200, so it was still above the 200, but it still sold off some. And then you see here, you've got, that's September. Sorry, here we go. November 2019, there's your 3 days down. Then we go December. See, you got a little bit of a run. You got a little bit of dip in December, and we got a big run up all the way here. And then 2020, right around March, a serious dump. I believe this is when the halving cycle actually came. And then there was a big market sell-off. And it fell all the way down. So this is kind of what I believe may play out again. This is where my synopsis comes from, is that, hey, September, they had a little dip. We'll go back and look again and see if that happened. We're looking for this is the first week, second week, and third week of September, even the fourth week of September. So September was consistently down, and then it rose up in October, which I did not watch for. I didn't come back and actually study this. So I'm studying it with you now. October, we see a run up. Then you see this November crash. It pumped up, but it crashed down. We have we see it drip down by the third week. By the last week of November, we get a little Christmas rally. And then before the halving cycle, all the way to February. So this is why I say I'm lightly trading now. But as soon as we get through that last week of November, I will begin accumulating again. We get over that little 9 count, we run up, and then right by the halving cycle, it craps the bed. So let's now look at September and see whether or not we see any similarities so far. This way we can see whether or not this has been playing out this year for this halving cycle. So let's go to September. We're in July, right here. August. So August, it crapped the bed. But September, it played a little bit different. But right around October time, we did have a couple down days, as you can see right there. A couple down days right there. But other than that, it actually pumped in September. There was like one little down whatever, but it actually pumped up. So it's not playing out 100%. It's not. So right now it pumped up, but we're already seeing a red candle on the week. We're just going to keep watching it. But remember, when it comes to getting closer and closer, and I'm going to I'll put a blue arrow once to for when the cycle comes in, for the halving cycle. I'll put an arrow down as roundabout when it's going to end up showing up. So this way we'll buy into that pump, because we saw there was a pump that happened right after November. That should be the lower, at the end of November, should be the lower point of the buying zone. And then from then, buy into the pump that's going to end up happening before the halving cycle. So have the bots trading through that entire run up, and then boom, get out of it before, buy the rumor, sell the news before that halving cycle happens. And then after that happens, it begins to cave down, be out of it. Another thing I'm also doing is I've been looking at Coinbase. I'm on their new trading platform. They have a new updated version. And then I'm also on Kraken. So I'm beginning to look at what assets are there to be able to be traded with the robot, which will be in the link in the description for the trading robot, link in the description for also the print on demand stuff, because I don't want you just using your own capital. I want you to make money elsewhere to be able to trade it up. Right? So this way you're going to use products, your assets, to be able to generate cash flow so that you can take a percentage of that, no more than 5%, and begin putting that into your trades, and then have your robots trade that. So let's look at the market, what we got right now. Let's hit refresh on the entire screen. Currently, Bitcoin seemingly was crapping the bed, but looks to be stabilizing itself a little bit. Hold on, let me make sure I'm on the Bitcoin chart. We're here. Let's go on to the day and let's zoom it out. There we go. So we are on the edge of the 9, the weekly 9. Also, we're below a monthly. It's having a hard time getting above this monthly line. So that means there's some weakness as this begins to encroach on the 9 count. So we're looking especially it's showing weakness. And then you can see that in the chart down here, that we went from strength, we're going into weakness, and then we had a couple red count days, but not enough to not continue the momentum up. But we're seeing now on the VIX and the RSI, the RSI is down. Wait, is it the RSI? Which is no, the VIX, sorry. The VIX is down, the volatility is down. And when volatility gets up here, you get your red days. Right? Once the volatility gets up here, you get some serious red days. So right now we have green all the way through here, and the volatility is still down. The RSI is still in overbought territory, and we're seeing the weakening. We've kissed off the top of the range, so we're expecting some downturn. So all the signs are leading itself there. But then we got to look at the markets, and of course, Apple. These are the weighted stocks, the magnificent seven, parts of the magnificent seven up here, and you can see Nvidia, Meta, so their AIO is still trying to hold the market up. Google is trying to hold the market up. Tesla is still holding the market up. But you can see Apple, which is weighted in a lot of portfolios, especially pensions, it has been down. It's consistently been down. But it did do a major run-up. So, but it hasn't. We'll see what happens. Like I'm not really watching Apple as much, but we'll see what happens. But you can see the weighted stocks up here, what's weighted into the market is beginning to show some weakness. And then of course we have other things like Shopify that are up because their earnings have been crushing it. Affirm, which as credit falters, will get spizzat. So just keep that in mind. But that is about it right now. Again, check out our shop. This week we're going to be rolling out the Winter Wonderland products, basically Sleepy Joe and everything else. so that you can sell your own products out here. Printify link will be in the description so that you can start earning, making your own stuff, because this market has changed, right? We're not going overseas to buy cheap goods to bring them back in. We're printing our own stuff. We're going just like the browser. The web browser went from, it was something for like all searches were all the same, to everything became personalized. Well, now you're seeing the same thing. Nobody wants what everybody else has. Everybody has their own style and everything else, and their own ways of expressing themselves. And now with being able to print on, like, you see the prices, being able to say, I can sell this at this price and then still get a residual out of it, that says a lot. And I'll be showing you how I made these designs using the backgrounds and everything else, just like I do with all the other stuff. So from Toxic Hustle, my name is J Tragic Jeffrey. I hope this is informative. I hope this helps you. Again, this week I'll be getting the trading stuff out for you absolutely free, not behind a paywall. So that's where you can learn how to begin trading Bitcoin and putting it behind these robots to start trading for yourself. All right, y'all take it easy. I'll holler at you later. Peace.